Hello guys, welcome to Career Compass. This is Dipan Ghataliya, your tutor for ACCA UK Tax and SBL paper. Students, I have seen that lots of the students are appreciating this campaign of providing the rapid revision sessions through the YouTube, and that is the free. But still, lots of the students have not yet subscribed our channel and is not liking our videos. So if you are liking this whole concept of rapid revision, students, and if you are getting the value out of these videos, then I would request you to please subscribe and like this video so that it can motivate us and we can provide you more and more videos like this. Now students, before wasting the time, let's start with the chapter. Now this chapter is nothing but the income from self-employment. Students, any kind of the income or profit earned from the business or the profession or freelancing work which is not under any employment which you are doing on your own is called a self-employment income. And that profit or income will be assessed on the current year basis rules of the basis period chapter, students. So that means that if we have accounting year end of 31st December 2020, then the whole profit of the whole 12-month period from January to December will be taxable in the tax year of 2020-21. I hope that you know the basis period rules, but if still you have any query with the basis period, students, feel free to ask me. Now students, let's directly jump into the pro forma to calculate our final taxable trading profit, or we can say tax adjusted trading profit pro forma. We have to start with the accounting net profit, that means we can say it's P&L profit, and then we have to make the certain adjustments to derive the taxable amount or taxable profit. Students, yes, but those adjustments also includes the capital allowance deduction, just like you can see on the screen. But students, in the examination, the majority of the time we will have to adjust our disallowable expenditures which are deducted in the P&L but actually not allowed by HMRC to be deducted as under tax purpose. So we have to add back those disallowable expenditures. So here we are having first of all the various disallowable expenditures which we need to mug up first of all, and in the examination, students, we have to take care of all the disallowable expenditures. Now the first one is expenditure which is not yet incurred wholly or exclusively for the business purpose. If any expenditure you have incurred, if that expenditure is having any kind of the private use, private purpose, having the private portion, then you have to adjust that expenditure, you have to eliminate, you have to disallow, you have to add back that private portion. Okay, so I hope you got the idea. Now then, after the students, next one is the appropriations. We already know that what is the appropriations, but whatever salary or interest to the owner or any kind of the drawings are not allowable, so you have to add back all the appropriations you have given. Okay, then after the third one is, students, that many times the salary will be paid to family. So if the member of the family is working and at a reasonable salary, then there is not a problem. But the important aspect over here coming up is that excessive salary to the family member will be disallowed. Okay. Then after the fourth one is, students, for sole trader or partnership businessman, students, sometimes if the owner makes a mistake or miss the due date of income tax payment, then HMRC will charge the interest or penalty. So that penalty or interest payment is the personal liability, it's not a business expenditure, because the personal income tax return due date was missed by the owner and it was not missed by the business. So that's why any kind of the interest penalty is levied in this case, students, is in the personal expenditure, so it will be disallowed. Okay, then after, students, the fifth one is the capital expenditure. If we are following the, students, specifically the accrual basis, then it's very obvious that capital expenditure is not allowable deductions. Obviously, students, but don't worry, students, you will going to get the capital allowance deduction if you are following the accrual method of accounting basis, right? Then after, students, the next one is the car leasing. If we lease the car with the CO2 emission of below 110 gram per kilometer, then the lease expense will be allowed fully. But if the CO2 emission is more than 110 gram per kilometer, then 15% of the expense will be disallowed. Now this is very important one for the examination and specifically for the MCQ purpose. This rule is very important. Now then after students, the next one is the subscriptions and the donation. Generally, the professional subscriptions are allowed. You don't need to worry. That means ACCA member can claim the deduction of the subscription fees. Then after students, the charitable donations are also allowed if it fulfills the 3 of the conditions given over here. But students, any donation to the political party will not be allowed. Please remember that. Now then after eighth expenditure is the entertainment and the gifts. Entertainment expenditures are disallowed, but only allow if it's only and exclusively made for the employees specifically. And any gift made to employees are also allowed to business, because the same amount of the gift will be taxable to the employee under employment income. So over here, under P&L, under tax adjusted trading profit, HMRC will going to allow that expenditure, because you have gifted something, you have given the gift to the employee, but on the other side, employee will have to pay the tax as an taxable benefit under the employment income. Okay, so that is why gifts to employees are allowed. And when we are talking about, in the first point, you can see entertainment expense. In general, if you have made entertainment expenditures, they're not allowed, but if entertainment expenditure to specifically the employees only will be allowed. Then after, but students, if we make the gift to customers, then it must fulfill 3 conditions given over here, students. Now, if you are fulfilling all the 3 conditions, then you can once again claim the deductions of that particular gift, students. Otherwise, it's not allowed. So it's a very important to understand that the gift has to be, students, has to have our advertisement, our logo or something like that. Our marketing should be done by way of gifting. Then after, students, that gift should not be of food, drink, tobacco or voucher exchangeable for goods, and it should not cost us more than £50 per recipient per year. Okay, so you have to understand them. But if in the question, if they have given that we are giving samples to the customer, then it is allowed, students. Then you don't need to worry. Okay, samples are always allowable. Students, now this entertainment and gift expenditure is a little bit the trickier one, so I would recommend you to revise more and more so that you cannot make a mistake in the examination also. So that's why mug up this whole thing properly. Then after, students, the 9th expenditure is the legal charges. So if it's for the business purpose, then it's allowed. If it's a capital nature, then it will not be allowed. But still, they have given some kind of exceptions. There are, students, basically the 3 exceptions you can see over here, which are having kind of capital nature, but still it is allowed specifically by the HMRC. Okay, so general rule is that capital nature legal expenditures are not allowed, but below 3 exceptions are allowed, even if it's having a capital nature. So student, those 3 are important for the examination. They can ask you out of these 3 expenditures and ask you that whether it's allowed or not. So you have to mug up the all 3 of given over here compulsorily. Okay. Then after, students, the last one is the allowance for a trade or impairment loss. We can say everything is allowed, but return of any kind of the bad debt written off, students, for a non-trade debt is not allowed. So if you have given the loan to employee, then it's not allowed, students, because it's your not a trade debt, it's your non-trade debt. It's not your day-to-day task to give the loan to your employees. Okay, your day-to-day task is to sell your goods to your customer. So any kind of the bad debt coming from the customer side, then it's because it's allowed because it's a trade debt. Okay, but any kind of the loan or any kind of the bad debt coming from the employees, then it's not allowed. It's a non-trade debt. So here we are done with the, students, the disallowable expenditures. Now, students, we have to make adjustment for the other items also. Like the next one is the taxable income, which is not included in the P&L, which actually should be added. Generally, this adjustment will require if owner takes the goods from the business for personal use, so that actually business should recognize as an income. It may be possible that person is or owner is withdrawing the goods without recording the drawings. Okay, so it may be possible. Now the business or the owner is withdrawing some kind of the goods and not recording at that whole transaction at all, then owner have to record the transaction at a selling price, as an they have to record it as an income in the books, and if already have recorded, students, at a cost, sometimes it may be possible that they may record it at a cost. Then students, we just have to adjust our income for the profit element only, because cost have already been recorded in the P&L. Now just profit element is not yet recorded, so that adjustment only we have to make. Then next adjustment, students, is the students about the income which are not taxable under the trading income but still included in the P&L, like capital receipt, property income, dividend income, exempt income. Now these are the income which we may have recorded in the P&L, but it should not be recorded in the P&L, right? So that we need to take care of. And then after, students, the last adjustment is the allowed expenditure which are not charged in the P&L. Generally business charge all the expenditure. They usually never forget that to charge any expenditures. But still, students, here are some examples which are allowed under the tax laws, but you will not find in the P&L. Now let's see that what are those examples, students. The first one is, let's say suppose, students, lease, short lease, students. If you have taken the short lease, then what will happen? Whatever lease payment that you will going to make, you will record it as an P&L, as in your rental expenditures, because that is the lease payment. But any kind of the premium you have paid on the short term lease, students, that particular premium you will going to capitalize it, and then over a period of time you will going to amortize it in the P&L. But for the tax purpose, students, amortization of that premium will not be allowed. So we have to add back first of all. And then, students, still business claim the deduction of the lease premium. Still the business, it doesn't mean, student, that if the HMRC is disallowing the amortization, that doesn't mean that you won't get anything. No, what will happen, students, instead of amortization and instead of capitalization, what you will going to get? You can deduct your premium, you can deduct your taxable premium amount, students, under directly the P&L. So we can say that premium amount was not there in the P&L, but now the tax rules are allowing to deduct your taxable premium from the P&L. Okay, but now one thing that you have to understand is that, students, that over here if you have paid the premium of, let's say suppose 50,000, but then after, students, that is your total premium. Then after we have to apply the formula to calculate your taxable premium. Now what exactly is the formula to calculate taxable premium? Students, you already know the formula for taxable premium is premium multiplied by 51 minus n divided by 50. The formula we have seen in the property income, students. You know how to calculate your taxable premium. Over there in the property income, students, we were calculating that premium, taxable premium for the landlord. Over here, students, we are calculating this premium amount as a tenant. Okay, so over there we were calculating as a lessor. Over here we are calculating as a lessee. But students, still business claim the deduction of the lease premium over here, students, which usually was not happening in the case of normal P&L. In the normal P&L, students, we were amortizing the whole expenditure. We were not claiming the whole premium amount at a stretch. Okay, and students, I hope you got the idea. Now, students, the last concept of the whole chapter is the cash basis of the accounting. The cash basis will record the income when received and expenses when paid actually. It's only available to unincorporated business, students. If you are planning to apply this concept as an LLP or company, then it's not available. Please remember that. But to the unincorporated business also, it's only available if your revenue is lower than £150,000. Now, if you want to start applying your cash basis of accounting concepts, then that is the limit. Then the limit is £150,000. So you can start applying that cash basis of accounting. And once you entered into the scheme, then there is another limit, and which is called you have to exit the scheme when your turnover exceeds £300,000. Okay, so there are two different threshold limit. One is the entry limit and the second is the exit limit. The first limit was the entry limit. Once your revenue is less than 150,000, you can enter into the scheme. But once your turnover exceeds £300,000, you compulsorily have to leave that cash basis scheme and you start once again following the accrual basis. Okay, so here we are done with this chapter, students. And one last thing, students, don't forget to subscribe the channel and like this video. Thank you.